Welcome back to our channel. Today, we're exploring one of the most fascinating journeys in human history. The history of money, from the barter system to digital currency. Money is something we use every day, yet very few people truly understand how it evolved. This story is not just about coins and notes, but about civilization itself, trade, power, and technology. Long before money existed, people relied on the barter system. In this system, goods and services were exchanged directly. For example, a farmer could trade wheat for a pot made by a potter, or a hunter could exchange meat for tools. While this system worked in small communities, it had major problems. The biggest issue was the double coincidence of wants. Both people needed to want what the other had at the same time. Barter also made it difficult to measure value, store wealth, or trade over long distances. To solve these problems, societies began using commodity money. Commodity money had intrinsic value, meaning the object itself was valuable. Items like cattle, salt, shells, grains, and even tea were used as money in different parts of the world. Salt was especially valuable in ancient times, and in fact, the word salary comes from salt. While commodity money improved trade, it was still inconvenient. Some items were heavy, perishable, or hard to divide into smaller units. This led to the invention of metal money. Ancient civilizations such as the Lydians around 600 BCE were among the first to mint coins made from precious metals like gold and silver. Coins were durable, portable, and had standardized values. They also carried symbols of rulers or states, which helped establish trust. Coins revolutionized trade, allowing economies to expand across regions and empires. The Roman Empire, for example, used coins extensively to support trade and taxation. As trade expanded further, carrying large amounts of metal became risky and impractical. This problem led to the invention of paper money. China was the first civilization to use paper currency during the Tang and Song dynasties. Merchants deposited their heavy coins and received paper notes in return. These notes represented value and could be exchanged for goods. Eventually, governments took control of issuing paper money, turning it into official currency. Paper money later spread to Europe, but it took time for people to trust it. Unlike gold or silver, paper had no intrinsic value. Its worth depended entirely on trust in the issuing authority. Over time, governments backed paper money with gold reserves, creating what became known as the gold standard. Under this system, paper money could be exchanged for a fixed amount of gold. The modern banking system developed alongside paper money. Banks began offering loans, credit, and savings accounts. Checks were introduced, allowing people to transfer money without using cash. This made large transactions safer and more efficient. As economies grew more complex, money became not just a medium of exchange, but also a tool for economic policy and national power. In the 20th century, most countries abandoned the gold standard. Money became fiat currency, meaning it has value because the government declares it legal tender, not because it is backed by physical commodities. Fiat money allows governments to control money supply, manage inflation, and respond to economic crises. However, it also requires strong trust in institutions. The next major transformation came with electronic money. As computers and the internet developed, money began to exist digitally. Credit cards, debit cards, and online banking changed how people paid for goods and services. Physical cash became less important, especially in developed countries. Transactions became faster, global, and more convenient than ever before. Mobile payments and digital wallets took this evolution even further. Services like online transfers, contactless payments, and smartphone apps made it possible to send money instantly across the world. Today, many people rarely carry cash at all. Money has become invisible, existing mostly as numbers on screens. The most revolutionary development in recent years is digital currency and cryptocurrency. Bitcoin, introduced in 2009, challenged the traditional idea of money. It is decentralized, meaning it is not controlled by any government or bank. Instead, it uses blockchain technology, a secure and transparent digital ledger. Cryptocurrencies promise lower transaction costs, financial freedom, and global access. But they also come with risks like volatility and regulation concerns. At the same time, governments are developing their own digital currencies known as central bank digital currencies. These aim to combine the efficiency of digital payments with the stability of government-backed money. This shows that the evolution of money is far from over. From simple barter to complex digital systems, money has continuously evolved to meet the needs of society. It reflects our progress in technology, trust, and cooperation. Understanding the history of money helps us understand how the world works today and where it may be heading tomorrow. If you found this journey through the history of money informative, don't forget to like, share, and subscribe to our channel for more insightful videos. Thanks for watching.